Let's now solve question number 2 from our May 2025 examination paper. This question is on preparation of financial statements. They've not asked you to prepare both balance sheet and PL. They've asked you to do only balance sheet with notes to accounts. Let's begin. Start reading the question. The question goes this way. Following particulars are furnished by Bella Limited for the year ended 31st of March 2025. Don't touch the trial balance. First see the adjustments. What adjustments are there, and also see what have they asked in the question. Last line of the question. You are required to prepare balance sheet as on 31st of March 2025. Okay, we can do that as per Schedule 3 of Companies Act. Okay, I get it. See the adjustments. First adjustment. What does it say? They've given cost of the asset. In the trial balance, what would be available is WDV. What is mentioned here is cost. What do? Cost and WDV both will be disclosed in our notes to accounts to identify accumulated depreciation. So this data of factory building, plant and machinery, furniture and fittings of 694, 535 and 176 is only disclosure purpose. Is only for the purpose of disclosure. So I'll make a marking here next to my assets saying that they have an adjustment and we need to disclose more information. This is with regard to factory building, plant and machinery, furniture and fittings. So what is available here? 620, 498 and 152 is WDV. What is available in the adjustment is cost. I'll open notes to accounts, write cost WDV. Difference will become our accumulated depreciation. A similar question for 20 marks with the P&L. I had given it to you as master question. There was revaluation also. This question is simplified version of that question. Fine. Anyways, I'll pin that link to you people of that question again. You can revisit that question and practice. Then we have equity capital on 1/4/2024. That is at the beginning of the year. Is 5,000 shares fully paid up? 5,000 shares fully paid up. I think each share is 100. Would be how much? 5 lakh. And 1,000 shares were 70 rupees paid up. So at the beginning of the year, company had 5,000 shares of 100 each fully paid up. 1,000 shares of rupees 100 each, 70 paid up. During the year, company has made call of rupees 30 on 1st of October and one shareholder could not pay, and that shareholder was holding 75 shares. There is calls in arrears. There is calls in 5,000 shares were fully paid up, 1,000 shares were partly paid up. Those 1,000 shares you made further call. In that further call, what you made for 1,000 shares, one shareholder holding 75 shares did not pay. 925 shares whoever is holding, they paid that 30 rupees properly. Only one person was holding 75 shares did not pay the money. How much had he already paid? 70. How much did he not pay? 30. His shares were forfeited. Very good. And the shares were reissued by the company at 70. Try and understand what is the nominal value? 100. How much was previously collected? 70. How much was not called? 30. Now in the year, how much did we call? 30. Did he pay 30? He did not pay 30. So then the share was forfeited. As a company, how much have I already collected from the old shareholder? 70. What is the minimum price at which you should issue? 30. If I issue at 30, 70 rupees discount, no. I have collected 70 from the old shareholder. Maximum discount that I can offer is 70. Minimum price I should collect is 30. They've reissued the share at 70. If I reissue the share at 70, I have made profit. I'll tell you two ways of computing profit. First method. How much did I collect from the new shareholder? 70. How much had I collected from the old shareholder? 70. I collected 70 from the old shareholder. On reissue, I collected 70. 70 plus 70. I've collected 140 rupees against this share. Nominal value is 100. 100 minus 140. 40 rupees is our profit on reissue. Per share 40 for 75 shares only. One way. How much is the profit per share? 40 rupees for 75 shares. I'll teach the same thing to you in another way. What is the other way of arriving at it? Very, very simple. How much had the old shareholder paid? 70. What is the old shareholder did not pay? 30. On reissue, what is the money I should collect? 30. What I should collect? Minimum I should collect 30, but how much did I collect? I've collected 70. In that 30 rupees is towards the unpaid money. So how much have I collected extra? 40. 2 plus 2. 4 rupees. 40 rupees per share into 75 shares. 3,000. They've already done entry for forfeiture. They've already done entry for reissue. They've already booked profit also. They're not asking us to write journal entries. They want us to prepare only balance sheet. How many shares? 75 shares. How much profit per share? 40. 75 into 40. 3,000 rupees is profit. What have they done? The profit on reissue of forfeited shares has been included in P&L. That is a mistake which we should rectify. Here they've given P&L. Have they given P&L? Yes, profit and loss 99,000. This profit includes the 3,000 profit on reissue of forfeited shares. You think from your foundation knowledge, whenever forfeited shares are reissued, excess money received should be in share forfeiture account. That from there it should go to capital reserve. They've incorrectly kept it in P&L. So from my P&L balance, I will deduct 3,000. I will write it to capital reserve 3,000. Here it is simple, but this adjustment could have been very, very complicated. I'll tell you, I'll share the link of that master question. Whoever has not done, please do that again. Where there is an error in a bigger form than this. And here P&L balance is known to us because they have not asked us to do P&L. And in that 20 marker question, which was asked in one of the exams before this old new scheme, no, in the old scheme when they had asked, they had not even given us P&L balance. We were supposed to do P&L and balance sheet. I hope you guys got it. So this is a baby question in that way. So how much do we deduct from P&L? 3,000 and write it to capital reserve. I'll recall this once again to you people slightly later. Come to the next adjustment. What is the next adjustment? Bill discounted but not yet matured 15,000. This is only for the purpose of disclosure. Contingent liability. I have discounted this bill with the banker. Banker has given me money. If my customer pays the money when the banker asks him on the maturity date, I have no liability. But if my customer dishonors the bill, banker will collect the money back from me. So I have a liability which is possible obligation. It's not a real obligation. It is not a present obligation. Whenever it is possible obligation, we call it contingent liability. Do balance sheet. Below the balance sheet, disclose this point exactly the same way. Bill discounted but not yet matured 15,000. Same to same, you'd have to write. Easy. So this is a contingent liability to be disclosed at the end of the balance sheet. See the next item. The balance of term loan from Public Finance Corporation includes 8,000 for interest accrued but not due. Let's say interest is payable every year in the month of June. Interest is payable on 30th of June every month. On 31st of March, we have computed interest till 31st March. Are we supposed to pay it? No. When is it supposed to be paid? June. Am I right? It is accrued on my part, but it is not due. It is accrued as an expense, but it is not due for payment. It is a liability, but it should not be merged with loan. It should be written as other current liability, but they've incorrectly included in the loan amount. So what do I do? In my trial balance, when I find that term loan, where is it? Here. Term loan from Public Financial Corporation 3,40,000. That incorrectly includes 8,000 interest liability. That interest accrued but not due should be written as other current liability. This term loan from Public Financial Corporation is borrowing. It can be long term or short term. I'll assume it to be long term borrowing. I will write this term loan from Public Financial Corporation of 3,40,000 in long term borrowing. Deduct 8,000 from the same, making it 3,32,000. And that 8,000 I would write it in my other current liability. Come to next adjustment. What do we have after this? I'm marking all the items with adjustment in the trial balance. Then I'll start with the answer. Directors declared a dividend of 5% on 10th of April 2025. Shabash. Year is ending on 31st of March 2025. When have they declared dividend? 10th of April. Was there a condition existing on the balance sheet date? No. So this is an event occurring after balance sheet date for which no adjustment is required. When do we write this dividend entry? Next year. When do we pay this dividend? Next year. This is not an event occurring after balance sheet date requiring adjustment. If not, I would have deducted this from my reserve and I would have paid, or I would have written it as other current liability. But this dividend is declared after 31st of March. So this is a transaction happening in the year 25-26. I am preparing balance sheet for 24-25. In my balance sheet of 24-25, there would be no entry for this. You got this? We can write one statement below our balance sheet stating that dividend is declared on 10th of April, which is in the year 2025-26. for which the accounting entry has to be given in the year 25-26, and as per accounting standard 4, there needs no adjustment for this dividend declared in the current year, that is 24-25. No entry, no adjustment, ignore this completely. Got it? That's it. We are done with all the adjustments ready. Come on, let's begin the answer from the top. चलिए शुरू से शुरू करते हैं. To begin with, I have equity share capital. Shall I draw one notes to accounts for equity share capital? Yes, I better do that. I'll write equity share capital 6 lakh rupees, 100 each. This is 5,000 shares of rupees 100 each fully paid up. 1,000 shares of rupees 100 each 70 paid. Further call made, forfeited, reissue. Right now we have 6,000 shares. This is after reissue. 6,000 shares of rupees 100 each fully paid up after reissue. Write it exactly the same. They have not given us any information about authorized capital. I'll assume this 6 lakh and 3 lakh itself is my authorized capital. Otherwise, you can choose to write authorized capital as XXX, imaginary figure, or you can write the same numbers also. This is my answer in the books of Bella Limited, balance sheet as on 31st of March 2025. Share capital will be my note number 1. In my note number 1, I'll write authorized and issued capital, which will be 6,000 shares of rupees, 6,000 equity shares. This is authorized capital. I'll write my issued capital separately. 6,000 equity shares, 3,000 preference shares, 6 lakh and 3 lakh. Am I right with 8%? Yes, 9 lakh. And I'll write the same as my called up and paid up capital also. 6,000 equity shares of rupees 100 each fully paid up 6 lakh. 3,000 8% preference shares of rupees 100 each fully paid up 3 lakh. Everything put together 9 lakh. Is this clear? I hope you guys don't have any doubt on this. Very nice. Come on. Let's see the next aspect. What is happening after that? Then we have factory building 6 lakh 20, plant and machinery 4 lakh 98, furniture and fixtures 1 lakh 52. Remember, these three values are WDVs. I will open one separate notes to accounts for tangible assets. On the asset side, under non-current assets, under property, plant and equipment, I'll write tangible assets as one note. I'll open one separate note for tangible assets. Let me write here factory building. How much? Factory building is 6 lakh 20. That will be my written down value. This is the value that will go to balance sheet. Under factory building, I have plant and machinery. Plant and machinery is 4 lakh 98. Then I have with me furniture and fittings, which is 1 lakh 52. All three assets recorded. Total of this should go to my balance sheet. Anyways, we'll keep it till the end. Once we finish all the adjustments and entire trial balance, then I'll post this. Then I have with me general reserve of 88,000. This needs no adjustment. I'll write this in my reserves and surplus. Should I prepare a notes to accounts for reserves? Yeah, better. You know why? Because we have profit. From that profit, that forfeiture item adjustment is also there. If there was only one reserve, no. In balance sheet only, next to general reserve, I would have written reserves and surplus. Next to it, I would have written general reserve and written the amount. But there are adjustments. I would open one notes to accounts. I'll write general reserve. How much? 88,000. Adjustments are happening with P&L, not with general reserve. Everybody got this? What do we have after this general reserve of 88? Term loan 3 lakh 40. There is no specific mention about whether it is long term or short term. You can assume either ways. I will assume it to be long term borrowing. Can I assume it short term? Absolutely yes. I'll assume it to be long term borrowing. I'll open one separate notes to accounts for long term borrowing. There I would write term loan. This will be in inner column. Why? Already we marked it in yellow. Items in yellow have some adjustment. So I'll keep it in the inner column to the extent of 3 lakh 40. Understood? Do you know why have I kept it in inner column? Interest is current liability. They have wrongly included it in the cost of the loan. We'll deduct it from the loan amount and write it as other current liability. Next we have inventory. These are closing inventories only. These are not opening inventories. If it was a question where they asked us to do PL, they would have given us opening inventory in the trial balance, closing inventory in the adjustment. Then I would have taken opening inventory minus closing inventory in statement of profit or loss. Closing inventory would have been written in balance sheet, which is available in adjustment. This is not like trial balance. Why? They've already finished preparation of PL. They've asked us to do only balance sheet. This inventory is closing inventory. Where would I write it? Balance sheet, asset side, current assets. Under that, what is the heading? Inventories. I'll open one notes to accounts for inventories. I'd write here raw material. How much is raw material? 1,35,000. Then we have finished goods. How much is finished goods? 66,000. I would write them and I can in fact total them also. It will be 2,01,000. Let it be this way. Can I go to next item in our trial balance or something that looks like trial balance? Provision for taxation 12,000. Provision for taxation is a provision. It's a liability. There are two provisions in our balance sheet liability side. Short term, long term. This is supposed to be paid within 12 months from the end of the year. So what provision is this? Short term provision. I would write 12,000 rupees as short term provision. Under short term provisions note, I'll write provision for tax 12,000. Did everybody get this? After this provision for tax, next I have with me dividend payable. They have declared a dividend in the previous year to the extent of 10,000, which is not yet paid. This 10,000 dividend payable, I am assuming that this dividend has nothing to do with the dividend given in adjustment. I am assuming both of them are not connected. This 10,000 is dividend payable. It is payable only when it is declared. I am assuming this dividend is declared before 31st of March. That's the assumption that I would have to make. This dividend will become other current liability. What will it become? I'll write in other current liabilities, dividend payable 10,000. Did everybody get this? Nice. Then after that, preliminary expenses of 21,000. Preliminary expense of 21,000, there is no space for it on the asset side. It's appearing on the debit side in the trial balance. This has to be adjusted from reserves and surplus in our notes to accounts. In my reserves and surplus, general reserve I can deduct, but I would better write it off against P&L, which I don't know yet. Sir, we know it. I mean, say I have not come across that in the trial balance order yet. I'll write P&L and I will write less preliminary expenses to the extent of 21,000 in the inner column. I hope everyone understood this. What do we have after this preliminary expenses? Then we have P&L 99. This has adjustment. I would write P&L 99. Is that okay? Next, we have cash in hand 16,000, cash at bank 39,000. 16 plus 39, 45, 55. 55,000 will become our asset. I'll write cash and cash equivalent, cash in hand. How much? 16,000. Cash at bank 39,000, together 55,000. This 55,000 will go to our balance sheet. When will we post items to balance sheet? Later. Then trade receivables 238. Doesn't need an adjustment. Doesn't need a notes to account. Straight away shall I write this 238 in the balance sheet? In the balance sheet, on the asset side, under trade receivables, I'll write 238 straight. Trade receivables, no? Yeah, 2,38,000 straight. Done? What do we have after that? Unsecured loan 85. It's a liability. Is this long term or short term? Can be assumed to be long term or short term. Our choice. I will assume it to be long term borrowing. Why? I've already opened one notes to accounts for long term borrowing. If I assume it to be a short term borrowing, then I would have to open one more notes to accounts. So time is very important. Yeah. Shall we save time? Okay, I'll write it in my long term borrowing as what is that? Unsecured loan 85. 85 will go to outer column. 340 will wait for interest in the inner column. Then we have trade payables 245. No adjustment. No need to draw notes to accounts. Shall I draw this straight to my balance sheet? Liability side, current liabilities, trade payables. Balance sheet, liability side, current liabilities, trade payable 245. Hey, here there are two columns. No, there are no inner column, outer column. Allapa. Current year, previous year. Sir, previous year data is not given. Still, draw previous year column and leave it blank. Leave it. If you don't have space, draw very, very small. The size of ledger folio you draw and leave it empty. Previous year also just write PY. It's okay. And then outstanding expenses 6,000. Current liability. There is some expenses what they have not paid. Current liabilities, I've opened one notes to accounts. Other current liabilities. Outstanding expenses 6,000. Is that all? Yeah. Whatever the trial balances look like or hybrid trial balance after PL is done. Now adjustments one at a time. Cost of the assets. Shall I disclose it in my tangible assets notes to accounts? 694, 535 and 176. Come on, let's write 694, 535 and 176. Write the total of this year. There is no revaluations given in this question. To cost minus WDV to arrive at accumulated depreciation. Accumulated depreciation further, they should have given it this way. How much was the depreciation till the beginning of the year? How much is the depreciation provided during the year? Such data is required but not allowable in this question. So whatever is allowable, I will write. Whatever is not allowable, what can you do? What can I do? What can we do? Yeah. Right. What is 694 minus 620? 74. 535 minus 498, 37. 176 minus 52, 24. If you add all of them together, 1,35,000 is accumulated depreciation. 12 lakh 70 is WDV. 12 lakh 70 WDV will go to balance sheet. And this whatever 135 is there, no, that should not go to PL. Why? That is total depreciation from the beginning till now. Only current year depreciation should go to PL. So how do we compute that? We don't have to compute it. Why? We are not doing PL. They've already given net profit. Understood? It would have been nice and fun if we were supposed to do. This once again. 5,000 shares were fully paid up at the beginning. No problem. 1,000 shares were 70 rupees paid up. Yes, there is a problem. What did they do? During the year, they made the call. Sir, cash entry baribeka. No, they've written all that. They've written share call to share capital, bank to share call, share forfeiture entry, everything done. So one shareholder who's holding 75 shares did not pay balance 30 rupees. What did they do? Forfeiture. Have they done accounting? Yes. What did they do after that? They reissued. At what rate? 70. Should we do accounting for that? No. What has happened? They've made profit on reissue. From old shareholder, they collected 70. 30 rupees not collected. Forfeited, they reissued it at 70. Together, they've collected 70 plus 70, 140. For a share of rupees 100. How much have they collected extra? 40. For how many shares? 75. 40 into 75. 3,000 profit has been wrongly included in P&L. Another way, old shareholder had paid 70. From the new shareholder, you're supposed to collect 30 minimum. You collected 70 from the new shareholder also. When you are supposed to collect 30 and you collect 70, you collected 40 rupees extra. That 40 is profit. Multiply that 40 with 75 shares. 3,000 has been wrongly included in P&L. We should just do rectification of that amount. What should I do in my reserves and surplus? I have P&L. Here I'll deduct profit. How did we get this? 75 shares into 40. Sir, how did I get 40? Should I explain 40? 70 from old shareholder plus 70 from new shareholder minus 100. That gives you 40. Or 75 shares multiplied by how much were you supposed to collect? 30. How much have you collected? 70. Either of the methods is accepted. I don't know which one did you like. Either of it you do. 70 minus 30 is 40. 70 plus 70 minus 100 is 40. If you don't understand both of this, do ask me. I'll share one CA foundation video to you people on company accounts. Humiliating? You should feel humiliated if you don't know. How much do you get? 3,000. I will deduct 3,000 from 99. It will become 96. Further, you will deduct 21. What do you get? 99 minus 3 minus 21. 75. And this 3,000 will appear as capital reserve. That is profit arising on for reissue of forfeited shares. If I take the total, I'll get my total reserves and surplus. Anyways, let's keep it pending. Let's do further adjustments. So then we have one more. This is only disclosure. Yeah. What is it? Bills are discounted but not yet matured 15. My balance sheet will tally here. Right below that I'll write bill discounted but not yet matured rupees 15,000. Contingent liability to be disclosed separately. Got it? Say something.
Yes, sir.
What do we have after that? Term loan includes interest accrued but not due 8,000. This 8,000 should be deducted from our term loan. Here I have term loan. How much? 340. From that I will deduct interest accrued but not due 8,000. That if I deduct, I'll get 3,32,000. And this 8,000 should be written as other current liability, interest accrued but not due. Further, they mentioned that this loan is secured against hypothecation of plant and machinery. ಏನ್ ಮಾಡೋದು ಇಲ್ಲೊಂದು ನೋಟ್ ಹಾಕೋದು loan is against hypothecation of just one disclosure. Is this fine with all of you? Similar thing, we'll disclose it in our here also. Factory building is, yeah. Oh, what is it? Plant and machinery, no? What is hypothecated? Plant and machinery. Hypothecated against loan from SFC? No, PFC, Public Financial Corporation. We should open the bracket, then we can close the bracket. Yen sir ನೀವು ಸಾರಿ ಕಣ್ರಿ. Disclosure purpose. Is this fine? Everybody understood? What do we have next after this? This dividend, though I told anyways, we will not going to give impact to this. That's it. Yay! Done. What to do? Close each of the notes to accounts, post it to balance sheet. 9 lakh share capital. Write it in balance sheet. Note number 1, 9 lakh. Then we'll do note number 2, reserves and surplus. This is when you will number the notes, okay? When you do it in the exam. Reserves and surplus. How much is it? 88 plus 75 plus 3. 1 lakh 66. Post 1 lakh 66 to balance sheet as note number 2, reserves and surplus. Then let's do long-term borrowings. Long-term borrowings. 332 plus 85. 4 lakh 17. Let me write note number 3, long-term borrowings, 4 lakh 17. Trade payables done. Other current liabilities. How much is it? Note number 4. 10 plus 6, 16. 16 plus 8, 24. Shall I write 24? Let me write 24 other current liabilities. Then we'll write short-term provisions. What do we have in short-term provisions? I think only one item. Is there any more items? Oh, we've missed out on one item. Dividend payable 10. Is there a dividend payable? We've written it in other current liabilities. So we would not be writing it here. What would be the total here? 12. Pakka. We will move this item. We will not write dividend payable in other current liabilities. We'll disclose it in short-term provisions. Sorry. Is it fine now? This will become 14. This will become 22. Is that right now? So I will write my other current liabilities as 14, short-term provisions as 22. Other current liabilities as 14, short-term provisions as 22. 22. 22. Sorry, yeah. Dividend payable is to be recorded in short-term provisions. Dividend payable should not be written in other current liabilities. I have changed it now. 22. Then let's go to property, plant and equipment. Hey, every item in the liability side is clear. Now look at items on the asset side. Asset side, to begin with, tangible assets. Total 12 lakh 70. Let's post 12 lakh 70. Next note, note number 6, 12 lakh 70. Then let's write inventories, note number 7. Inventories, note number 7, 2 lakh 1000. Let me write 2 lakh 1000 here. Then I would have to, trade receivable is already written. Last item to be written, cash and cash equivalent. How much is it? Cash and cash equivalent? 55. Shall I post 55? Now take the total on the liability side first. 9 lakh plus 1 lakh 66 plus 4 lakh 17 plus 2 lakh 45 plus 14 plus 22. 17 lakh 64,000. Then check the total on the asset side. 12 lakh 70 plus 2 lakh 1 plus 2 lakh 38 plus 55,000. 17 lakh 64,000, and that's where your balance sheet tallies. Remember to write this note and not to include the dividend in your AS4 dividend. I'm going to say basically dividend declared after the balance sheet date, not to give impact for that dividend. And once if you take care of that, your balance sheet is done and 14 marks is pocketed. Got it?